coming. I think it's extremely important to highlight that not every lender would come out and do this for a realtor. And that's a point that I want to make. I think that just starts off right there with how much you're dedicated to coming out, partnering with realtors, working with people, working with clients. And it speaks to character, it speaks to commitment, things like that. So I just want to say thank you for doing this and starting today. That being said, there's a lot of terminology, there's a lot of things that the average person isn't going to know what all of this means. And today I wanted to kind of sit and speak with you to try and get an understanding of what your processes are, maybe to just get a better understanding of a few of these terms and what these things are what's going on in the markets currently. And generally, I think the best place to start would be getting a little bit of background on you. Let's just start with, how did you wind up in the mortgage and the home loans world?
Gotcha. So I graduated college with a finance degree, and I didn't really know what I wanted to do with it. Obviously, I was passionate about finance and numbers and those kind of things, but there's so many options and things to do. So I didn't really immediately know, and tried a few different things, and literally just landed in mortgage by accident. It wasn't intended at all, but once I got into it, it was very interesting. I loved the environment. I loved different aspects of it. I just didn't know a whole lot about it. As you said, there's a lot of terms that are just so, you know, in the beginning it was like, this is a lot. I have a lot to learn. So it was not by design, but I just kind of joined in probably late 2016, early 17 if you want to round up. And that's kind of where it started.
Okay.
Yeah.
And you are currently with First United.
Yes.
And I think a big question, a thing that I like to highlight with clients is your lender local? Is your lender an online lender? Is your lender your bank? Is your lender experienced in home loans, or is it just part of what they do, kind of what they do on the side? Because I think a lot of people, and rightly so, focus on the numbers, right? They go into it wanting to get the best deal, and that is the right way to go into it.
Right.
I think what they don't get told by their parents, their friends, their family, even by realtors, by people in the industry, is it's not, a lender's not just a lender about numbers. There's many lenders out there quoting all sorts of crazy numbers, and they'll tell you that they'll close the deal in 4 days. And what I think I want to kind of highlight with you is, and the experience that I've had with you, is the thoroughness of making sure the deal gets to the closing table. And I think that's what gets lost in the interview process with lenders, is what is your skill set? Like, what have you seen in the industry and things like that? What do you feel you bring to the table with that?
Gotcha. So it's definitely true, when people are going through the mortgage process, the home buying process, you should absolutely shop lenders. I do it on my own personal loans. I mean, that's how you make good decisions. So the first thing that people go to is, of course, what's the rate, what's the rate, what's the rate? So they're just fixated on what number do they hear, but not oftentimes do they know how that number is being gotten to. And what I mean by that are, what are the lender fees? Are there any discount points, which is kind of a confusing term because discount points really means costs for the rate. So, you know, when I ask, okay, well that, you know, definitely sounds like a good rate. What is the cost for that rate? Hardly anyone can answer that question. They said, well, I just have a pre-approval letter from so-and-so and it just has a rate on it. I said, well, you know, that's a really great rate. It's below market from what I can see and what's been going on lately, but how are they arriving to that number? Are you having to pay anything for it, or you know what their fees are? And most people are not really sure, because again, they're shopping, what's the rate, they get the letter and then they're excited, they move on, and they're not really digging into some of the financials. So I think that's really important when they do shop, is find out what the numbers are, absolutely, but dig deeper to it. And then past the numbers, like what you're talking about is, and this is what I tell clients, past the numbers, let's say I'm even, right? Let's say my rates, fees, everything is compatible with a different lender that you're shopping with. Who do you click with? Who do you get along with? Who can you call or text and they're like, hey, I'm in a meeting, but I'll get right back to you, or hey, I have an assistant, they can talk to you. Like, you know, who's open and communicating, and not just a typical 9 to 5, or hey, it's 4:59, gotta go, shutting down the laptop kind of thing. So there's other things that I do feel like make those decisions in anything that you're doing, whether it's mortgage or buying any sort of good. You should find out not just what is my cost, but what's the quality behind the cost that I'm paying for, and what's the availability. And Can I shoot them straight like I would a friend? Are they gonna be honest with me? Are they gonna just tell me what I wanna hear? Or are they gonna tell me what I need to hear to get something done or to make sure it goes smoothly? So I really think that's a big difference with our team. Is I always tell people, if you're looking for a robot experience, it's just not gonna be here. I'm a normal person. I wake up every day just like you do, you know, grunt sometimes because it's Monday. I was like, you know, so I'm the same way. I'm probably gonna have a bad day here or there. I'm gonna have a good day here or there. And I have things outside of work that I may talk to you about, and you may talk to me about your soccer practice or your kids or, you know, whatever that you're involved in. And there's more to the mortgage than just do this. And so I think we really focus on the relationship behind it, knowing that, hey, you're a human being who has things going on. I'm also a human being who has things going on. Let's communicate with each other. Let's find out what's important to each other and try to stay on track. And part of that is being thorough up front. You know, some lenders won't request documents up front. They just will do the pre-approval letter. I just won't do that. The few times I've done it, it's never worked out. So I try to do as much up front as I can. That way I'm eliminating as many issues as possible. And if we have an issue together, great, let's focus on what it is and let's resolve it. If it can't be resolved, then let's not buy a house right now.
Right.
You know, and at least that gives opportunity for the client to say, okay, I have some decisions I need to make, versus making it after they've gone under contract, after they've done the earnest money, after they've done all this, spent realtor's time and, you know, going around. And I'm not perfect. Not every loan works the way I'm describing it. Most do, but there have been few that things don't work out on. More issues, you know, come about that not necessarily sales can always see up front. But for the most part, we really do have a great from application to close ratio, because we're super thorough in the beginning. And I always tell them, I'm being respectful of your time by me asking for all this stuff now.
So I think that's amazing. That's one of the things when I recommend you and refer you out to clients that I bring up. And just to kind of really break that down, is a lot of lenders will write a letter and they do the bare minimum on the pre-approval process. So basically you're thinking you're pre-approved because you got this letter and that
Right.
you're good to go. What they don't realize is that it still has to go through underwriting. It still has to have 10 more eyeballs get put on this file, dig through. And what I have found in my experience and my client's experience with you has been that you do request all those documents ahead of time, so you can be very thorough looking through it before you issue the pre-approval.
Right.
And then again, it goes back to, is this an online lender? Is this, and I don't mean to pick on online lenders, but I've had a recent experience where the original person that client spoke to was in Ohio, and then the next person that the file got handed off to was in Oklahoma, and then the next file was handed off to was in like Montana, and there was nothing in-house. Like everything was, a bunch of strangers are working on your file. Whereas with you, everything's kind of in-house.
Correct.
You know, you're all coming in, you're all aware that you're on the same team. Now that doesn't mean that you can just tell an underwriter what to underwrite and how to do their job.
That'd be nice.
But it does mean that you can have interaction and get insight and like stop by the desk and say, hey, this file is on a time limit, we're on a deadline, I need this kind of pushed a little bit, can you give me 5 minutes, can I go grab you a cup of coffee while you look at this over real quick?
Yep.
What is your insight? I wasn't understanding this email, anything like that. That teamwork is what gets a home buyer to the finish line.
It is.
And the fact that your institution, that you and your team have that inside, and then it makes it easier for the realtor. And I think that's a big part that clients don't necessarily understand with a realtor's job. You know,
you guys have
not
so
there.
much that you're focusing on, and when you're having to worry about what's going on with the loan, which there are also 30 million pieces to a loan, you guys don't have the time or capacity to be chasing those things down. And then if you're chasing down everything that we're doing, something's gonna get dropped on your end. That is your responsibility.
Right.
So.
And that's a lot of it is just a lot of a realtor's job is to actually make sure that everyone in the team is working, and it's to help the client build that team.
Yes.
It's to help them navigate the whole process. So clients come to me, and then obviously I refer your services, and you know, I always tell them, to be very honest, do your shopping. Like, I don't want to just tell you take this person and then you go with one person.
Right.
I always tell people, and it's the same thing when they're talking to me about, they're thinking about finishing. I have friends that have asked about, oh, I'm thinking about redoing my bathroom, and I tell people, at least contact 3, 2 to 3. That way you can get different questions answered, and you can play Peter off Paul, basically. But going back to it, it comes to a lot of teamwork. Your team inside of what you do has a great organization, and you guys are well put together. And then you and me have been able to work numerous times because of that. And again, we don't, that's the thing I do like about you is that you're not one of those lenders. I've had lenders where I'm out shopping with clients and we need pre-approval letters for an amount to be changed. And they're just not on the job. They're not working. They're like, yeah, all right, whatever. And we were in a very, very insane market last year, where 5 minutes made the difference.
Yes.
Nonetheless, like 2 days. Like I can't wait 2 days. This house is gonna be under contract.
Right.
It's gonna be gone. So I've enjoyed my partnerships with you, with the clients, and the clients have it as well. Now, what I also love about you specifically when we work together is your relationships with title. Because just like the realtor is trying to, as it's not easy for me to follow up with lenders and make sure every lender is doing everything they do, we also have a title company involved. And I like the fact that you've been very proactive in that, where you work with me, but you also work with title, and you're also working with the client. So I think we both see eye to eye on that, and I think that's why our deals are getting to the closing table. Big reason why I wanted to put that up on this video is how important it is that your realtor, that your lender, that your inspector, that the people you are hiring to work on your behalf are willing to work, communicate, and be open with each other.
Right.
That's what gets a deal to closing.
And
many of them don't get there because somebody dropped the ball and just was MIA and they didn't do their job, and now we've got push past closing, the sellers get frustrated, so on and so forth, deals die every day.
Yeah, I mean, it's what you said about teamwork, that's, I think, my biggest message about what we do and what we aim to do, right? Again, we're not perfect people, but when you have a whole team of supportive cast, if you will, a supportive team together that's like, hey, we need this from Tyler, hey, are you good, do you need anything from me, no, okay, this, when you're just at least communicating, it just makes things go so much better, and you feel more confident. The buyers are way less worried because they're like, okay, my team is on it. Even if I don't need anything from you, I may just CC you on an email, just so you know something's being done, something's being communicated. And guess what? This process is not perfect. Somebody's gonna drop the ball accidentally. No one does it on purpose. Somebody's gonna fall short somewhere. Something may not have gone ordered because somebody was confused, the other person did it. So something
And that's
will
where the
happen.
backups to the backups to the backups happen.
That's
So
where
if
you
I
have
drop the
support.
ball and you're keeping your eye on it and you call me and, hey, Chris, what about this? Do we have that document? Do we have this? Do we have that? Or sometimes it's even the clients themselves. Like they have to get things signed in a certain amount of time, or they need to get this turned in a certain time. And it's like, hey, Chris, I haven't heard from your client, or title needs something for
Can you
this.
just push them for me as well? Maybe give a call in. I mean,
Right.
but those kind of things, you have to have that good working relationship, and a relationship in general to say, hey, I need help.
Right.
It's okay to say, hey, I need help. Like, I physically cannot do it all. I try my best, and
Right.
sometimes it does work out, but I would rather communicate and just say, hey, this one, it looks like the appraiser gave us a date. He or she did not
Right.
meet their date, right? And they're not responding to us. So, there's only so much we can control. There's only so much we can call and email, and if they're behind a few days, that may push back some other things, but we're gonna do everything we can to stick to our original date. At least people have a heads up, and they're not as frustrated if it happens, right?
So that's a great point. And last year, appraisals were a big part of deals. But let's try to walk through the process a little bit with you. A lot of buyers, it's their first time. So they don't know. A lot of them are afraid, and they're out there and they think that they're not ready. They want to buy a home, but they think they're not ready because mom and dad have told them since they're growing up, or they hear from their friends and family, you have to have this much money and you have to have this and you have to have that. And then they see stuff on TV and they're just like, oh, well, I'm not going to get approved for anything, or I can't do this, and they want to do it. They just have the fear of the unknown.
Right.
But they don't know how qualified they actually are.
Right.
So my advice has always been the first step is to see where we're at.
Right.
Where do you feel like when you have clients call, is it ever too early for a client to call you? Is it ever and it may not be time to buy yet, but is it ever too early for them to reach out to start the process with you?
I always say no, and the reason why I laughed when you were talking about family and parents, and my parents are probably gonna be shaking their head and give me lip about this at dinner. My parents said the same, 20% down, conventional's the only, so many things, and as, their kid, I'm thinking, they're right, and most of the time my parents are right, but that's not, it's not true. Things have changed since when they bought, or, guidelines change all the time with mortgages. So, it's not necessarily true, or that may not fit what's best for the client. So I'm just laughing and thinking about that because I have so many people that will call and say, well, I heard this, the internet told me that, my Aunt Susie told me this, my uncle told me this, who bought in 1954, and I'm like, okay, but those may not pertain to you individually. Right. You're like, I always say buyers are like a thumbprint. No person is the same. You're gonna have some similarities. You may have the same loan type, or you may have a similar credit score as somebody, but you're still not the same, and you're gonna have different requirements and different down payments and structures, and that's where the lender comes into play. But as far as it being too early, I always say no. I am an over planner to the T. Anyone about that will tell you I plan too much. There's always something going on in my head. So for me, I'd rather know super early out. Hey, let me go ahead and get my application in. I know my credit's not really where it needs to be to buy, probably, but let me just see if my income is there. Do I have enough time on my job? Maybe the lender could make some recommendations that way when I am ready, and maybe 12 months from now, or maybe 6 months from now, I have some sort of game plan. So when clients call and they ask those questions, or I'm worried, or I said, hey, the first place to start is to start, right? You can't know if you don't try. And if it's a no right now, I'm not going to go on Facebook and tell everybody you didn't qualify for a home. It's a relationship between me and you. Right. Let's figure out what the answer is. Let's figure out what the game plan is. And then it's up to you. I'm not going to call you every day to buy a house. And a month from now, hey, how's everything going? I mean, you're welcome to check in with us, but I'm here to give you the information that you need. And I hope, obviously, that you circle back with us when the time's right. But it's never too early to just plan, get a game plan, and know what is my timeline? What am I shooting for? And that allows the buyer time to line up financial resources. Maybe they need to pay down some credit cards. Maybe they need to open up debt. Don't get me started on that. Some people need to open up credit cards.
This is where I want to get into a little bit. So there's just one loan program, right? There's just a one size fits all for everyone. There's just, you have to fit this and you have to fit that. There's not multiple variations, right? There's not.
They apply using one application, but from their one application, I obviously can pick different programs.
That's the thing. So
this is, and that's. Apply once, and then I go in and based off all the data, go through all my programs and figure out what makes sense and how to structure it.
And that's my point. I'm being a little bit sarcastic.
Okay.
Is the fact that clients think that because they talk to their friends that it has to be the same loan type, it has to be conventional, it can't be they don't want to do FHA, or they think, oh well, I don't have 20-30% to put down, I don't want to pay PMI or MIP. However, you don't realize that if you wait another 6 months, you wait another year, you wait another year and a half, you might finally have that, and you might avoid that part of your mortgage, but your interest rate might now be a point higher, and you might actually wind up paying more in a year from now, which interest rates is something I want to touch on in a second. I think that's going to be what I wanted to stress to people, is that you know what you know. You may know some things that you don't know, but there is a chunk of information of you don't know this.
Yeah.
And that's why I always recommend to clients is the pre-approval is the start. You contact me first. I'm not one of those realtors that says, go do your lender first and come to me. I'm the one that says, come to me and I'm here from the start. I'm here from day one. If you're thinking about buying a home, call me today. Even if it's 2 years from now, we'll map out the stages to get you there, and then in 2 years you'll be in your home. And then you get your lender, but you have to get in touch with the lender because you're thinking you're not qualified. You're thinking you can only do this. There's multiple programs out there. There's different ways to get this done. And until you see that and have a professional like yourself map that out, you don't know what you don't know.
And there are clients that come that do know a lot. I mean, I get some clients that have done so much research, they've gotten good data, they ask a ton of great questions. I'm like, hey, are you interested in joining the mortgage business? You actually know a lot. So there are great questions and great knowledge that they have found online through YouTube. And the more research, the better. I always am a fan when people do their research, but like I said, there are times where it's data overload and it's too much from too many people, and then they're formulating, and I'm guilty of doing that myself for whatever it may be. Oh, I've already formulated this idea, and then I got there and I'm like, well, that wasn't anything like I thought it was going to be. So it's the same thing on the mortgage side. I tell them, don't borrow trouble. My grandma used to tell me, don't borrow trouble. You're worrying and stressing. Just get a game plan, figure out what it is. And I'm like, people make the mortgage process seem like it's some crazy ordeal, just apply and let's see where you're
Yeah.
at, and then talk about it and then go on about your day.
And see,
It's
I'm
all
guilty
right.
of this with doctors, and my wife will laugh at me, because I'll walk into a doctor's office and I will have looked up stuff online, and
Yeah,
I'll diagnose myself, and I'll
I'm the
be,
same way.
Dr. So-and-so, I have, malaria, I have typhoid fever, I'm
I
like,
already
look, here's
know.
all the symptoms, like,
I
this
have
is,
no qualifications, but I know.
right,
WebMD.
and
I'm
then they just
11
look
years.
at me and they're like,
Mhm.
well, yes, like, you're not necessarily incorrect, some of those symptoms do match what you're
Right.
finding online, I get it, but, it takes a little bit more experience.
Mhm.
Here's some other
I've gone to
variations
school
that.
for like 30 years for this. This is-
Right.
Yeah.
Right. And that's what I always say, like, to all clients, like, just go see. Maybe you are right. Maybe you have done all the research and you know everything about it, and you get to the lender and you apply and you were 100% correct.
Mhm.
But getting there and getting that confirmation is super critical, in my opinion, because you don't want to stop yourself from achieving your goals before you even start the process.
I think that's a wonderful thing to say. Like, just like you said, don't stop yourself before you've even gotten into the race. You're counting yourself out perhaps, and more importantly, to tag onto that, not just are you qualified and is this the right time, but does this estimate match your budget? I do not send anybody out if they get a pre-approval letter from me, they're immediately getting an estimate.
Mm-hmm.
They just go hand in hand.
Mhm.
Too often I get people that I'm like, they're shopping, right? They're shopping me with so-and-so, and I'm like, totally fine. What rate are they offering you? What's the cost? Again, they don't know. They've never gotten numbers and said, well, how do you feel comfortable going out to shop for this XYZ priced home if you don't even know a target monthly payment, right? I mean, we can't predict every single tax that you're gonna have, or, your insurance, but a relative number, because when I run them estimates, they may say, whoa, like, I can pay that, but I really don't want to. That doesn't fit my budget. That's not what I had planned. That's not what I read on Zillow. That's not what
Right.
the internet told me.
Right.
And I said, okay, well, with the down payment that I have for you, keep in mind some of these internet, the ads and things like that are gonna default to a very specific criteria that you, again, may not be into, which is fine. But if you're not wanting to pay that much, let's scale it back. Let's look in a different area of town. But you don't know all that unless you game plan and done everything up front. Because why would I send you out with Chris shopping for a $500,000 home in the highest, tax neighborhood available, and then by the time you get all the estimates, you're like, I don't want to do that. What a
Right.
waste of time for
Right.
everybody,
Right,
know?
and you may have found a house and you're like, oh, I'm obsessed with this house, and then the numbers and the house don't match for you, and now you're frustrated. Because what you
Buyer's
want is not what you want over here.
Mhm.
So it's better to know, as a realtor, it's better for me to know with the lender, okay, where are we trying to shop? Where is your general estimate of what
Mhm.
your monthly note's gonna be? And then, it can even help me shop and help pull options, and we can look at those tax rates. And we can say, well, this is a very high tax rate, so I know you're pre-qualified for X amount of dollars, but
Right.
if you're trying to keep your note at this amount, maybe we don't shop at 500, maybe we look at 450 or 400
Mhm.
in this area where the tax is this high. Now, in this area where the tax is super low,
You have a little bit more.
then we have a little bit more wiggle room, and maybe we go a little higher. And that's where that information for a real estate agent is critical. And again, so many lenders just issue a piece of paper with a giant number on it, and they say, go have fun. And that's the situation you get into, is you go out with you're 6 steps down the road before you pull back on the reins and find out, oh, that's not what I want.
Right.
And then you've wasted all that time.
And it's an awareness thing, again, like I always want to be known for a few things: teamwork, awareness, education, personable. Like, all these things are how I want to be treated.
For
If
sure.
I do anything in life, whether it's cars, relationships, friendships, going out to eat at a restaurant, I want it to be professional. I want it to have some fun to it,
Right.
but I want to know what I'm getting. Like,
Right.
I want to know what to expect. I want to know as much as humanly possible, right? And we can't predict the future. Again, it's not a perfect process. Something's going to come up, but to the best of your ability, have you gone over everything with your loan officer? That way you can make sure, like, okay, I know what I'm getting into, and you know what? I'm willing to go above budget on this one because I have the numbers in hand. And there's times where people go out with Chris and they're like, hey, I really love this home. I'm super concerned because I know the taxes are high. I know we already talked about, do you mind just running a little monthly payment for me? Just let me know where it's at so I and my family can make that decision.
And that's where that experience, every step of the way, while you're shopping, while you're in the
Mhm.
process, that teamwork and having a qualified and a good, strong lender with that kind of relationship matters. Jump into a few different pieces of terminology, and let's also kind of go through the process. When a client is coming to you, they're a first-time home buyer.
Mhm.
What should they have in order to make the experience better for them and easier for you to help them?
Gotcha. Great question. So when I'm on the phone, if I'm doing emails, if I'm texting, some clients are like, hey, I'm super busy, do you mind texting me? I will text. So however they need to get the information, but typically I always say last 2 years of W-2s that you've received, last 2 years of tax returns, they don't always apply. So most lenders will tell you that we don't always need your tax returns, but I'd rather ask for them up front than have to go back and ask for a million things later. So 2 years of W-2s, 2 years of tax returns, your most recent, usually it's 30 days worth of pay stubs, so depending on your pay cycles. So I just say, about 2 to 3 pay stubs is normal for people. And your bank statements, so the last 2 months of statements that you've received from your bank where you plan to pull funds from. So some people are, hey, I'm still saving, or hey, I'm getting a gift. Not a problem. Again, just communicate that with us. If you're a fresh college graduate, I get this question all the time, because again, they're counting themselves out. I can't buy. You can. It just depends on how you're being paid, what you went into, how recently did you graduate, those kind of things. But I can even get unofficial school transcripts to show when they graduated. So that could be asked for as well. Obviously, if you're a business owner, there's a lot more documents involved, but they already know that, and we joke all the time. They'll need profit and loss statements, things like that. But standard for most people, 2 years of tax returns, 2 years of W-2s, a few pay stubs, and 2 bank statements of where you plan to pull your funds from. If you have multiple bank statements, 2 of each, right? I got 2 from Chase, 2 from Wells, 2 from here, whatever it is that covers, hey, this is where I plan to pull my money from to buy this home.
Perfect. Now, say it is 2 clients. They're buying a home together, separate accounts. They just need to both have all of those documents. Now, let's just say one of them is a homemaker, unemployed, maybe going to school. Then you just need the documents from over this. Do you need the tax returns from this one?
I don't. If we're not using the way to think about it is if I'm not using their income, I don't really need the documents, because it's only if you're adding income. Most of the time, obviously we have to verify your income and things like that, but sometimes we'll have 2 people on a loan and it's only coming from one person's bank statement. That's fine. We just need to know where are the funds coming from. So totally fine in that case.
Okay.
Yeah.
Awesome. Okay, so we are in January of 2022, and I'm sure many people, right, we are seeing many people, it feels like a blur. The last 2 years has felt like one long blur. Interest rates look to be on the rise this year. So one term that many clients have heard is locking in. What is locking in a rate, and how is that accomplished? And when is that accomplished in the process? Do they do that at the application? Can they do that before we've picked a home? Can they lock in a rate? If we're looking at a neighborhood and they've gotten through the application and kind of gotten your pre-approval, can they lock in right then with the rates? And this is becoming a question because
Right.
the rates are scheduled and looking to just keep increasing over time this year, and many people would like to lock in now and kind of know how it works.
Gotcha. So I will try to simplify it because rates they're tricky, and some lenders may differ in their responses. So full disclaimer,
Sure.
Don't know what goes on at every single company. We cannot lock in a rate unless you have a contract. So that lock itself, the interest rate lock, is tied to not only the borrower, but to the property address. So if your file right now is just TBD because you don't have a property, that rate cannot be secured to it. So that's gonna be, and that's a part I really hit on in the beginning with clients. Now there's so many parts of the process, not everybody remembers it, and we have to kind of revamp on that, but
Right.
when you're pre-qualified, say, hey, this is the current market rate as of today. I'm quoting you. If you find a home today and you say, Kelsey, I want the rate that you quoted me, I will honor that. I'm not gonna quote you anything that I cannot lock on that same day that I quoted you. I won't do it.
Right.
Some lenders will quote you something really low and then whoops, and I quote whatever was available at that time, but rates can change significantly, same, higher, lower, whatever. So no, the rate cannot be locked, at least on, for most lenders whenever you're not under contract. So the minute I get a contract, that's when I go in and I see what the rates are as of that market environment as of that day. You don't have to lock the same day. Like let's say the bond market was doing pretty bad. So again, trying to simplify it, but when the bond market's really down and it's negative, typically pricing is going to be pretty skewed the next day. So sometimes we wait until the bond market's a little bit better, and then we kind of gauge what pricing is at that time. But we can lock once you are under contract.
What if they lock in a rate we get under contract, they do lock in a rate, and 5 days later, there's better rates? Are they able to unlock and then relock that rate?
So the technical answer is no.
Okay.
You cannot unlock a rate. The best way to explain it is rates are secured on the back end for every mortgage company. It's almost like hedging a bet against the market. You can't go back in time and undo a trade or something that you've done. So it's not undoable. No, that's not really a word, but it's not undoable. But if it's a significant drop, like what we saw in 2020, what was it, March 6th? I know there's like a
Right.
time. But, you know, in February they were one thing, and then it was like, sham, if it goes significantly down, most lenders, they may call to float down. We don't call that. We're just gonna try to find a middle ground with you, right? Because we've already paid money on the back end, we can't get that back. So we'll try to meet a client in the middle if it's a significant dip like that. If it's daily market movement where it's, you know, that happens, and we've been seeing it trend upwards.
Or
We have,
trend,
so it'll go down and then up, and then down and up, but it's generally going like this.
Right.
So, I don't know if that answered your question, I'm trying
No,
to
it
make it simple.
did. No, that was
Okay.
perfect. And the reason I ask these questions, and I know these aren't like necessarily the easiest questions, but I think they're important questions to get out there so the clients just have that information going
Right.
in. And a lot of them, again, it's not every lender's the same, and the information that they're getting, you know, trust is important.
Yes.
And that's kind of what I wanted to get through with this video today. And then also this information will help them make the best decisions for themselves.
Mhm.
This year, it looks like rates are just gonna continue. And again, you're gonna have the daily little edging that
Mhm.
up, down, a little slight,
Mhm.
but the majority, it looks like the line's gonna be going up this year. And locking in rates is going to be a conversation I think a lot of clients are going to be asking about. So I'm
And they
hoping that this, yeah.
And they should, I mean, it's always good to ask, you know, and further to add into the locking, lenders have different locking periods, and I've been with several lenders, so that's a fair statement to make. We have, you know, 30-day locks, 45-day locks, 60-day locks, 75-day locks. The longest that we have is a 75. Some may have a little bit longer, just again, it depends on the lender.
So it's about 2.5 months.
So we do have longer options available. Now, keep in mind, these are particularly mainly for new build homes, because obviously if you go under contract on resale, you're supposed to be closing in 5 minutes.
Right.
But you know, 25 days-ish. So we're gonna put you on a normal 30-day lock, and that's that. If you go under contract with a new build and the builder says, hey, we're gonna finish in probably about 45 days, I'm gonna go ahead and probably put you on a 60-day lock, because a lot of times with the supply chain issues and things like that, things are moving. So if we know a target date, it's easier for me. Okay, rates are really good right now. Again, it's going up, but I see a little bit of a dip today. It looks like pricing is better today than yesterday. Do you want me to go ahead and put you on a 60-day lock? Let's go ahead and get it secured. That way we're not messing with another, you know, increase or spike. So that can happen on, it's again more common with new builds if we can try to time it out. That being said, and many of my clients will tell you this, we've been told one thing by the builder, and to their credit, it was a genuine statement. We're gonna make end of February, and then
Right, and windows don't get delivered.
and windows
what
don't
we're
get
looking at,
delivered, and
yeah.
they're out of tile, and center point, and just, you know,
Right.
all the things. So again, and most of these builders are, they're not incentivized to keep holding your house from you. They want to sell you that house.
Right.
But they can't also predict all these things, so
Right.
it's fun.
And that's where the realtor comes in to try and help.
Yes.
Because I have a lot of experience with new construction, and yes, like automatically, any date that I'm giving as a target date, like I'm automatically adding 14 days. And if I'm seeing what I'm seeing right now, I may be adding 21 days to that when I'm counseling you.
Yes.
So if they're telling us we're gonna hit by March 15th, I'm like, I would plan
Right.
for March 15th.
Give a buffer.
But put a buffer in for April 7th.
Yes.
Because again, a lot of things can happen, weather has an event and all that.
And that's
But
where
the beautiful thing
Chris's experience, sorry to interrupt, but that's where Chris's experience comes into play, because I can call him and say, hey, I heard this from the builder, I'm working with the client, with title, with everybody else, like, can you just call the construction manager for me and find out, is this a, we wish, we hope, but probably not kind of
Right,
deal? Or is it
right.
like, hey, yeah, we have pretty much everything we need, so pending some sort of, you know, ice storm of whatever year that was,
Right.
but also I don't even remember, but like pending some of these other things, like we should be on target. So that's where you really, as a buyer, when we're talking to roundabout teamwork, you gotta have somebody on the front end who's pushing the builder to say, hey, give me real information.
Right.
I don't wanna just be told something to make me happy so I can go grab my coffee.
And those builders
Tell
will
me.
overpromise, and like, this is why I tell people when they talk about new construction, and they say, well, I'm just gonna go to a new construction office. There's many amazing sales reps at those offices,
Mhm.
but those are sales reps, and they are representing The builder.
Correct.
100%. They're super friendly, they're super sweet, they're fun to talk to.
Probably great people.
They are good
Yep.
people. I love working with many of them. I'm here to represent you and your interests as a buyer, and I'm here to, when you get the fluff talk, because they're trying to do the best to represent the builder,
Right.
I'm gonna counter it with, okay, that was sweet, but here's the practicality. I'm not saying that they're lying or they're wrong, but in my experience, here's what I've seen, so make sure that you plan for both.
And just preparing, like you talked about, prepare, educate, give the heads up, have the conversations early, because what people don't want to happen, and what I learned, and part of why I'm so passionate about why I do what I do now, is if people don't ever know, or you don't ever give them some sort of heads up, like I want a buyer to be able to like, you know what, Kelsey, I can't remember word for word what you said, because I just don't do mortgages for a living, I'm an electrical engineer, but you did tell me something that this may happen.
Right.
You did tell me what an appraisal meant. You
Right.
did tell me that I could have an escrow shortage because I had a new build home. Like, I remember these conversations, I pulled up my paperwork, you put it to me in writing, I didn't read it, but you did say something to me, and this is not the first time I'm hearing of it. That's why we together wanna make sure it may feel like a lot of data, and maybe some lenders don't wanna give it, I know some realtors don't wanna overload, and there's a point to that, you don't wanna tell, okay, all these things, because at the end of the day, it's not the buyer's job to be a realtor, it's not the buyer's job to be a lender.
Nope.
But I want them to feel empowered and have the knowledge and be like, I feel taken care of, because my team is communicating with me, they're being transparent with me, and they have my back in those situations.
What I try to do is give them a brief overview of the whole experience, and then when we start the experience, I say, this is the step we're on, and here's the step that's coming.
Right.
And then every way through that, like, here's what we're doing, and here's what will be coming next.
Right.
And here's what this is important. Oh, by the way, step 3 down the road is going to be something you might want to start working on now. Like, if you need to start interviewing inspection people, like maybe we're about to go out shopping, well, that can go very quickly. So you might want to start calling home inspectors, things like that. But yes, it can be way too much data to throw at someone all at once. I'm trying to break it down. So that gets into locking rates, which again is also a really beneficial thing. So if I lock a rate, we find a house, and client A puts in the offer, we go under contract on that home, and they contact you and we're all set. They can lock in today, and then if we get to the closing table and the rates have gone up, they're already locked in.
They're already protected.
So locking in is also, it's not something to think of as a negative thing, it's something to be aware of.
Yes.
But it can be absolutely very beneficial, especially in the market we're in with the interest rates right now.
And in most cases, I found, and this is just me speaking from my own experience with buying a few homes, what's funny, again, I always like to bring back the human element, because people just hear like, oh, she's in sales on the other line. I'm like, when I buy my homes, I'm grilling my loan officer too, because I can't do my own loans. So I'm asking the same questions you are, maybe a little bit more in depth, but, oh, well, the market may drop an eighth of a point tomorrow, and then it doesn't. It goes up a quarter. So by me trying to save an eighth, now it's up a quarter, and now I'm having remorse. So more often than not, if it's a down day and your loan officer says, hey, for peace of mind, we don't think that rates are gonna tank, over the next few days, I would just go ahead and lock it in.
Right.
And
Get it
again,
done.
there's times I listen, there's times I didn't listen, right? Because I can save $40,
Right.
and then I was like,
And
well,
bite
I just gained 80, so.
Right.
So yes, if you're eligible to lock and your loan officer says, hey, looks like a good day, I don't know what's gonna do tomorrow, the next day, I mean, none of us know, I wouldn't be working here if I knew what rates were gonna do every day. I would say go ahead and lock.
Right.
I mean, you're not gonna wake up, if you wake up every single day and check the market, what rates today, then maybe you don't lock immediately, but just know like you are taking more of a risk by not locking in, especially given the environment that we're in, especially how fast we've seen them rise in such a short amount of time. It's been crazy. So I just tell people, hey, if it's close enough to what you're being quoted and you're comfortable with the monthly payment, I wouldn't risk it. I would lock in something that you feel comfortable with, and that's advice I've given to my own self. So
There you go.
Yeah.
Okay, so that gets us into that portion of it. And again, I'm brief because some of this can really get into the weeds, but I know a few people have heard of underwriting. Not many people really know what that means. They've heard it, and maybe we give a brief synopsis of just what that is.
Sure. I think it's important to build up a little bit to it, so I will be very brief, bullet point, try to not talk so much on it. So my side up front is the sales portion, right? And it's me, my assistant Stacy, who's amazing. Y'all that worked with her know that. We're a true team. We literally played softball together. It's a whole backstory. But anyway, so we work on
Trust falls and all that.
Yes. So chance and terrible, everything.
I love it.
So we do the pre-approval process. Are you pre-approved to buy this home? Given with all the data that we've gathered, with everything we can possibly see right now, are you pre-approved? Yes? Okay, great. Then we send it to processing. I send all my files up front early if I can, meaning you don't actually have to be under contract to go through processing and underwriting. That's how I prefer to do my files, especially right now with everything going on. It's just a more thorough, and we'll explain a little bit later why I do that. But it goes to processing. Processing's job is basically, they're gonna pull some deeper background reports that sales doesn't always have access to. Most of them we don't have access to for a reason. So they do kind of more digging, verifying that how I set up the file is correct. Did I miss anything? Which again, it happens. Did you miss anything? Are we short on funds, etc. Their job is to scrub, clean the file, get everything organized, throw out anything that we don't need, add things that we do need. They may go to the bar and say, hey, looks like we just need one more pay stub, or hey, I saw this large deposit, do you mind sourcing that for us? So they'll kind of make it clean. Then they send it to an underwriter. And the underwriter always gets a bad rap, and I'm here to defend the underwriters, okay? Because most of them are amazing. We have really good underwriters at our company, and I can say that I've worked at several different companies. They're probably some of the best underwriters I've seen. Best from like their quality, but they're not over picking things that don't need to be picked. They are following what are Fannie Mae, Freddie Mac guidelines, what are our internal, like when we do jumbo things, we have our own internal guidelines. What's the guidelines? Is it asking for something else that I just feel like asking for? No? Okay, well I'm not gonna ask for it if it's not on my list. So underwriter's job is to pick over everything that we've sent, look for any risks or anything that they even have additional background reports that run up in their system that Stacy, the processor, doesn't even have access to. So they have more internal checking. So everything is just checking, confirming that the loan can be closable. And what they'll do is they'll say, yes, this person is conditionally approved. And everyone always panics, condition. Right. Yes, you are not final approved because it's I mean, not impossible. There are, sometimes files are super clean, it's one and done. But they're gonna say, yeah, you're approved, we can close this loan. However, the conditions are, we need an appraisal, we need survey back, we need title, and those things is not even the borrower's responsibility to do, right?
For sure.
Or they'll say, hey, Mr. Borrower, you're approved, but I have some questions on your employment gap here. They will have conditions, and then we relay those to the clients. We work on gathering those conditions, but underwriting is basically just a really thorough scrub, making sure we didn't miss anything. They run, again, more deeper background reports.
And that's important because everything before closing is before closing.
Yes.
So when we get to those last final days of closing, if the processor didn't do her job, if you don't do your job, and underwriting just has an off day and doesn't do their job, or maybe it's just a bad lender and they don't care and the underwriter's just ready to be out the door, if they don't do their job correctly, if underwriting doesn't scrub that file, you run a risk of getting to a closing table or short thereof, and then finding out, oh, we can't actually approve you for this loan.
Yes.
And now we have a contract, we're 5 days out, you've already hired, electric, you've set up your gas, movers, and then you find out, oh, by the way, we might have to postpone this a week, we might have to postpone this 2 weeks, or, God forbid, no, we can't actually issue this loan.
Yes.
So again, they do get a bad rap, but I think that they serve a very important purpose, and that's something I wanted to relate, because a lot of people, they just don't know. They have they hear these terms and this and that, and then they just come to me and they're like, so what is underwriting? How does that, are they is underwriting mean, or do they really?
Most of them are extremely nice.
Do I need to talk to underwriting? Can I call, right, you know what I mean?
Yeah.
So I'm just hold on, let's just kind of break down what their job is and how that works.
Well, in a simplified way too, I mean, again, it's not simple, I just wanna throw that out there, but their job is to confirm that I'm right.
Right.
In my thinking, right?
Right.
And again, am I always right? No, because I'm a human being, but am I relatively right considering what I set down, to what Stacy covered, to what Mandy, our processor, looked at? Did we cover everything? If we didn't, what did we miss? And like I said, there's several files that are just super clean. Hey, the borrower needs to explain this credit inquiry. We may need to get a letter of explanation for something, or a gift letter filled out because the family member is supposed to give a gift. Right. So a lot of it is very straightforward and pretty simple, but underwriting is basically there to confirm, can this loan close? Can the loan close? And they're following their guidelines and what they have to do. And like I said, if they underwrite a bad file and God forbid the borrower defaults, the underwriter can, that it's big time for them. So they're being thorough to protect their job as well.
Right.
Yeah.
So that actually brings us into, you get through the underwriting process, and that serves a huge purpose. when we're getting into the final closing stages, they get a document called a CD.
Yes.
And I'll let you, I'm being a little silly for the camera, but
You're fine.
what is the importance of this document? What is the times and the deadlines?
Perfect.
And how does that work a little bit?
Yes. So a CD, it's called a CD, but it is a closing disclosure. Lenders are required by law to deliver that to you 3 business days before your closing, and you must e-sign it. Doesn't matter if it's correct, that's a big one, because I will be frank, and most other lenders, I'm friends with other loan officers, and we talk and laugh about this all the time. Our disclosure people, they're assigned, again, think of the supply and the demand right now. Our closers are getting in, okay, Mr. Smith is closing in 3 days, I gotta get some out, I go in the file, okay, it's relatively close, here, there you go, Mr. Smith, e-sign it, and they're out. They're in and out, so your earnest money may not be credited to you yet, right? There may be a missing seller credit, maybe they don't have your taxes all the way correct, but you have to e-sign that document to allow closing to happen in 3 business days. So I have someone say, well, the insurance off by $1, not signing it. I'm like, you have to sign it.
Right.
You're not agreeing that the document is correct. You are acknowledging receipt, and that's the best way I can explain it to people, and how my other loan officers, fellow loan officers explain it to their clients. You are acknowledging that you have received the document, you've read the document, yes, I've read it, e-sign.
Right.
Because there's a good chance that preliminary CD or preliminary closing disclosure can and will change from when you get the final CD. And the final CD, you don't have to e-sign. That's once the title company has had an opportunity with the lender's closing department to balance everything out, because they have to get it to the penny. That's another thing, is people are like, I need to know the amount now, I need to know the amount now. Okay, well, sometimes the title company is working on another file by the time my closer sends in their CD. And then they send their CD, well, my closer may be in another file. So it's not an instant momentary, and they'll do their best to, get, because they want to be done with the file. They don't want to have to keep going back and forth throughout multiple days. So they're doing their best, but they have to get it down to the penny. So
right.
Preliminary CD, preliminary closing disclosure is just, like it says, preliminary. E-sign because you received it. Please review it. I always tell my clients, most of the time by the time it's gone out, I may not even have a chance to review it. Take notes, let me know what you see is wrong, what's missing, what I need to look for, because I'm gonna have to look for it anyway on the final. But I always tell them, take notes and tell me exactly what you see is missing.
What if they miss the signature? Can we still go to closing?
No.
100%?
Nope.
We have to push the date?
Yep.
Which requires an updated contract, and we have to redo this, and all sorts of other documents.
It is like a hard
depending on when we have to push the date.
Correct.
I mean, if we're just pushing it a day, then maybe, but it can be.
But it can go from, if you miss Friday, you have to close Monday, because obviously people don't close on Saturdays, at least that I'm aware of. So yes, it has to be e-sign. And this is, I've had people say, well, can't First United make a rule? Like, why are you so mean? I was like, it's not even my rule. Like, it is a national, like,
so this
guideline.
is a federal guideline.
Yes.
Like
it is absolutely required for every single lender that you've ever worked for.
Right.
If they're not doing that, then I've never heard of it, but they're probably not compliant, they're probably gonna be out of business. But yes, you have to e-sign a document 3 business days before you're closing. You have to, otherwise the closing. And every day that you don't, just keep adding another day.
Right.
I don't sign it, all right, move. I don't sign it, I move. I don't sign it. So I always tell my clients too, hey, just know, like, you may be clear to close, but you still have one more document to e-sign. Well, I'm in Jamaica. Okay, well, whip out your phone, make sure you're by Wi-Fi.
Right.
You have to e-sign this document.
For sure.
So
I thought, and it's an experience that I've had with my clients. I constantly, especially when I'm working with you, is I get that email like, hey, it's coming. You and me work together, like, to really prep the client, like, on this day is when you're probably gonna receive it, and you need to sign it, right? You need to sign it by this time. Like, there's no passing. If you don't, we do not pass go. So
correct. And we tell people that, again, part of being transparent, putting everything in writing. As soon as that CD comes out, me or Stacy will email the client, we'll CC the realtors as well, builder rep, whoever needs to be notified, hey, the preliminary CD has gone out. And in bold and highlight, I'm like, please note, it may not be correct, don't panic, take notes on what's right, but you must sign regardless, otherwise, we will not make XYZ date. Or if it goes out early, I'm like, hey, you technically have a few more days to take a look at it, but do not, like, my best advice is just go in, get it signed, and then look at it.
Have you ever had a situation where it didn't get signed in time?
I have, yeah.
Not fun.
It is not fun, and believe it or not, most of the time, the few times I remember specifically, I will not mention his name, but he was asleep. And the CD had come out, I think around, it came out around 6 o'clock, but again, everyone's working as fast as they can on these things, so I called him, hey, I'm at dinner, I'll get to it, okay, I wanna let you know it came out. Contacted, Chris, said, hey, well, it wasn't you, it was a different Chris, but contacted the realtor and said, hey, remind your client, please, this has to be sent before midnight. 9 o'clock, I said, hey, Mr. So-and-so, I just wanna check in. I called at 11 p.m. I'm not proud to say that because I try not to disturb people past normal business hours, but I was like, everyone is going to panic if we don't close. And it was like a Friday closing. So again, you're talking Monday.
Right.
And I eventually had to go to sleep myself. And the next morning I woke up, he signed it at midnight, or past midnight. He signed at 1 a.m., but it's 1 a.m. the next business day. So it's still push closing. So it has to be before midnight on that third day. And he didn't, is there any way around it? Can I do anything? Some people ESign their CDs, that's okay. If we get an ESign closing disclosure, that's okay too. But I'm talking like if the only method was then for ESign and it didn't register until the next day, no, there's nothing we can do about it because the system showed the information.
There you go.
Yeah, it was awful.
These are little details. I tried today, again, the point to be informational. Fun stuff lined up. What do you see 2022? What are your aspirations for this year? How are you and Stacy? Are you guys having a lot of fun so far? Any silly antics or things going on in the office?
I love fun stuff. So as far as business-wise, I think we're going to continue, even though rates are up, and like I said, I'm experiencing it myself for my own homes. Even with rates being up, they're still affordable. Traditionally speaking, if you look at historical rates, they're still really low, and we've had suppressed rates for the last 2 years. So, at some point this was bound to happen. We're still seeing a lot of new applications. People are still wanting to buy homes. They're still relocating to the area. Texas is awesome. Houston is an amazing place to live. So I have a lot of East Coast, West Coast, people from really cold places. And I'm like, I cannot relate unless it's on random days like today was kind of chilly. So we're getting a lot of new clients in, a lot of really cool people, and developing a lot of, new friendships, new relationships. So I think business is going to be good this year. I think people are still going to buy as much as they can. Now, obviously, we're continuing to hit the inventory issue, but I do know a lot of builders, some I work with, some that I don't, that are scooping up new acreage, and they're going to start building. So we're making room, right?
Okay.
So I think builders are making room for it. So I think we're going to continue to see business happen.
So you and Stacy, any plans for TikTok this year?
Yes. So I joined TikTok. I am the worst millennial ever. I did not have a TikTok, and I was like, what is this ticking talk thing? I'm so out of the loop. And the reason why I made it is because I have 2 adorable cats at home. And I thought, these 2 things need to start paying some rent around here. I'm tired of them just freeloading it. So I was like, they're so cute. I'm gonna put them on TikTok, make them famous, and maybe I'll be an influencer or whatever they talk about. For the cats, cat purposes. But then someone's like, you need to do TikTok for mortgage. And I think that I am a funny person, but I am like, I hate anything with cameras or like, I'm more like an in-person person. So the whole, yes, to answer your question, yes, I think Stacy will be more filming. I think I would have to pay Stacy extra to be in a TikTok with me.
It's not easy being in front of this camera. That's something that a lot of people don't realize when they get into real estate or get into business or whatever. I myself, over the last year, the camera goes on and I just go stiff. I can stand in front of a room of 50 people and cut up and talk and jibber jabber. We've done it.
Mm-hmm.
You put one camera on me and I just get completely frozen, like catatonic. It's
well, I think too, because we're like obviously wanting to show you guys our best side, right? So you're like, oh, right. It's like, I just need to be myself. Like, you're gonna see it in person, and I hope that I portray who I am whenever the camera is not rolling. So,
so that's something. It's a weird analogy or story, but like I've gone into a restaurant and you get like that super corporate person, and they're not human. I mean, they are a human being, but they're not behaving like one. So they've got like 5,000 pins around their collar, and they're doing every corporate speech saying the way corporate wants, every single word said. And it's like, I just want a waiter. I want a waitress. I want a waiter. Like, I don't want all the corporate, just, let's have a little bit of an interaction. And like, I'm sure you have other tables, like the human side of it. And the fact that you kind of say, I am human all the time. Like, hey, this is me. This is who I am. I think that is what comes across relatable. And I'm that way with like my Instagram and my, Like, it's funny. You know, I mean, like
Mhm.
my friends look at my Instagram and they think it's hysterical that I'm in all these pictures. I hate it. You know what I mean? I hate pictures. Like, I was always the guy that was like, yeah, I hate pictures, I don't wanna do this. You know, it's just my generation, the way we were raised. So yeah, just being a little silly, having a little fun, you know, I think it goes a long way with clients, especially during this process.
Yes.
Because this is a big process. So you want someone who's thorough and competent and professional and great, but you also want someone that's going to have a little bit of fun and kind of warm up the days that seem like they're overwhelming.
Well, and life is way too short, as we all know, and I think from 2020, just to get on the soapbox for 2 seconds, like, it taught a lot of people many things, and I think something I learned over the last few years, just for me personally, you know, was like, man, I am stressing myself out. I'm so worried, and I still do, like, so I'm not very good at it, but I'm so stressed about, like, somebody being perfect and everything being perfect, people being happy, and it's like, I can't forget about the present and to give some grace to myself, and like, I have to realize, like, I have a family, I have animals, I have friends, I have all these other things in life that bring me happiness, not just work. And I want my work to make other people happy to the best of my ability, but I have to acknowledge that, like, it's not gonna be perfect, and I may fail at something, and I may have to fix some things, but you know what, it's okay. At the end of the day, like, this mortgage is gonna get done, this client's gonna get in their home, and you know what, if they hate me, like, I'm sorry, you know,
Well,
I can't control that.
You're very modest and very humble that way, but in my experience with all the clients that we've had together, it has not been that experience. But,
I love what I do, and Stacy's a huge part of it. Stacy, my assistant, as y'all know, and she is hilarious, like, literally the funniest person I think I've ever met. So if she sees me stressing out, you know, more than I should be, she will just say something smart and just crack me up and then get me back on a level. So I really appreciate, again, having a team of people who, they know you, and Chris knows me. He knows if I'm having a stressed out moment, and he's like, everything all right over there?
and vice versa.
And vice versa.
And we both had those last
Dr.
year.
Filling and Oprahing each other back and forth, you
right.
know. So, I mean, I love that you said, I'm a human being. I love what I do. I hope I'm excellent at what I do. That's my goal, is I want to strive for excellence. It comes from all the softball and just, you gotta be a winner, you know. It's like, I still feel that way, but I'm learning to be like, you know what, you have to still be a person, and you have to relay that to your clients, because I don't ever want them for 1 second to think I'm just a robot and a button pusher, and I have no feelings.
Cold and calculating and disconcerted.
Yep.
That's just not the way that
Yep.
It has been an absolute pleasure speaking with you today. Why don't you go ahead and look into the camera and kind of tell people your name and who you work for. I want them to be very aware at how amazing you are. I'm sure this video has covered a lot of that, and I wanted to thoroughly thank you again so much for doing this.
Thank you, Chris. So thank you to Chris Cohen as well for having me out with Compass. He has been a very trusted real estate partner to me and to my clients over the past year or so, and my clients are significantly better off by using him. I can tell you that firsthand. He's very thorough, and he's just been an amazing friend, as well as a professional. So my name is Kelsey Majstorovic. Say that 10 times fast. I'm with First United Bank, locally here in the area. I am your local loan officer, and just a normal human being, just trying to help people get into homes and help educate them and have some teamwork along the way.